Hello everybody and welcome to the first video on this channel. In today's video I would like to give you a trade recap on a trade that I took on USDCAD on the 24th of October 2023. With this trade I was able to make $2,500 whilst using different kinds of ICT concepts. Going into the executions, you can see the exact number that we were able to make with this trade, and this is how we executed it. If you like this kind of content, I will definitely recommend going towards my Twitter page where I share all kinds of trade recaps and a lot more. But for now, let's dive into the charts. Before we are going into the USDCAD chart, we needed to create a bias on DXY. This is due to the fact that these two biases needed to be aligned with each other. But before I'm going to annotate it myself, I would like to give you a couple seconds to just simply look at the chart and maybe think about it yourself and how you would annotate it. When we are creating a bias, it is important to apply the correct dealing range towards our chart. When we take a look at this daily chart on DXY, we can actually see that we are currently trading inside a fractal dealing range between this swing low and this swing high. We can also see that we are trading from a premium back towards a discount, but the main thing that interests me is how that we have reached those discount levels again. Because when we look at the fact how price actually did develop over time, we can actually see that we were accumulating inside this daily FEG. Here on Monday at the weekly open, we can actually see that we had a manipulation move downwards towards sell side liquidity in discount levels. Due to this fact, I was actually bullish going into Tuesday due to the AMD schematic, where we have an accumulation phase, manipulation phase down into a key level, in this case sell side liquidity, and I will expect an expansion move on the day afterwards. When we take a look how this played out, we can actually see that on Tuesday we traded below Monday low into a bullish daily order block in discount levels. Afterwards, as expected, we got the expansion move towards the upside. We were bullish on DXY, but how does this translate towards the USDCAD? Well, let's dive into this 4-hour chart and dismantle everything to give you all the information. Again, when we are creating a bias, we start off with applying the correct dealing range on our chart. The correct dealing range in this case is between this swing low and this swing high. And when we take a look at the most recent price action, we can actually see that we are trading in discount levels as well, just as DXY did. When we dive into it a little more, we can see that we have high resistance liquidity runs. Besides that, we also have a full fill of this 4-hour FEG. This means that internal range liquidity in discount levels is taken. And what do we know when we have taken internal range liquidity? What should we be looking out for next? When you are guessing external range liquidity, you are definitely on the right path. You can see that we have failure swings on these highs, which is in this case our next draw on liquidity on the 4-hour time frame. Before we are going into the lower time frame, I would like to tell you about the characteristics of a classic buy day. I've defined them in 3 different points. The first point is you actually want to see an accumulation phase during the Asia session. The second point, during the London session, you want to see the low of the day created below the midnight open price. The final point is you want to see a continuation of the order flow that was created in the London session. I've defined those characteristics into a schematic. You can see that over here we are accumulating during the Asia session. After the New York midnight open price, we can see that price traded heavily downwards into a discount PD array. We have created the low of the day here in the London session. After we have created the low of the day, we can trade upwards into the New York session. What is important to mention is that you want your draw on liquidity is still being intact and not reached yet. You want to see a downwards move into a discounted PD array to see continuation towards your draw on liquidity during the New York session. But how does the schematic translate towards real life price action? We can see that during Asia we had this accumulation, and after that the midnight open price was established, we can see that we had a slight upwards move and we manipulated down, taking out Monday low. This was actually the low of the day, and we can say that this was the London manipulation. After the manipulation took place, we had a big expansion move during the course of the day and during the New York session as well, towards our draw on liquidity. When we are trading, we're always seeking those market maker models. As I've said before, we have established our bias based on the 4-hour time frame. When it comes to price delivery, we need to look at time frame alignment. When we have created a bias on the 4-hour time frame, we need to have a market maker model on the M15. And as you can see, when you take a look at these candles, you can actually see that we have a market maker buy model on the M15. This is identified by this original consolidation over here, the accumulation over here, the second accumulation over here, and this region of smart money reversal going into the buy side of the curve. Of course, we were seeking long, so we should focus ourselves on the buy side of the curve. As we have stated before, we actually had a manipulation move towards the downside, taking out Monday low during the London session. We had order pairing over here, and afterwards we displaced towards the upside, breaking structure over here. Afterwards we got a move towards this FVG and the expansion towards the upside. This was also the region where I got into buys as well, towards my draw on liquidity, which was in this case Monday high. We went over the price action during the London session, so now we're going into a deep dive for the New York session. What was important is that our draw on liquidity is still intact at the beginning of the New York session. The second thing that I've said earlier in this video is actually that you want to see a retracement towards a discounted PD array so that we can continue our move towards the upside. And now notice how price action did form. We are in this fractal dealing range before the New York kill zone started. At the start of the New York kill zone, we had a downwards move into discount into a 15-minute order block, which in this case was our PD array. Afterwards, we got the heavy expansion move towards our draw on liquidity, which was Monday high. We did have red follow news during the AM session in New York. This volatility injection was the last push that was needed for price to reach our target. And now we are at the end of this trade recap. If you enjoyed this video, I would highly appreciate if you like the video, and if you want to see more of this kind of content, make sure to subscribe. But for now, have a nice day, and until next time.